Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone's doing well. Time to caffeinate and dominate. We had a very interesting session yesterday as we watched what was really a late morning rally, largely led by Microsoft. As we already knew that there was this Copilot program, this Copilot AI from Microsoft. And then suddenly around, and you could see the news really did coincide with the rally. Suddenly we find out that Microsoft's simply going to charge more for that for that service, and boom, you can see the move. Now, of course, if you listen to this show, if you're in the Sector Secrets Mastery or have been listening to any of the free videos for any length of time, you know that high concentration weighting is what allows Microsoft to just pull everything up with it. And that's exactly what we saw. So if you're looking at the QQQ, if you were looking at XLK, if you're looking at MSFT, you saw the way in which one stock, heavily weighted, can have that disproportionate influence. By the way, if that concept is something that you're realizing, yeah, Rag, I get that a very small number of stocks can move the market, but which ones are they and how does it affect other things that you might be doing? Yesterday, I did a video. It's in the simpler trading. Let's see. I know I have it here somewhere. It's in the simpler trading. Oh, by the way, this is, if you haven't checked out my YouTube channel, you can. I put some other videos if I'm on Benzinga or other things like that. I'll put them on YouTube under my name at Raghee Horner. But if you head on over to the Simpler Trading YouTube channel, you'll see that under the videos from last night, I talked about something that a lot of folks have questions about, which is market breadth, right? That comes up a lot. So in this video, I'll give you all a sneak peek of the top tier outlook. It is the report. It's the newsletter I've been doing now for about, I guess, 3 months. I'm trying to remember how long it's been. It's been about 3 months. And it's a very specific look at symbols. And it's a very specific look at different levels that we're looking at. In fact, if you've been following it, we've been talking about financials, avoiding healthcare, sticking with buy the dip with tech. And this has been an ongoing narrative with the top stories and the levels in the newsletter. But I got into this often misused and misunderstood concept of market breadth. So if you're wondering, Rob, does it matter? It does, but not in the way that most people will talk about. It matters in the high concentration weighted way. And Microsoft was such a great example of that yesterday, where one stock can pull an entire index of 99 other stocks in the NASDAQ 100 up, right? So anyway, check that out. And also, if you have any questions, leave them there at the video. Most of you know I respond very frequently to questions and comments there. All right. So let us get to our questions. And let's start off with Praveen, who asked, good morning. I'm trying to purchase a standalone daily price movement range. Okay, the advisor back at Simpler Trading is saying we can't. Oh, so we are in the process of getting that available. A lot of you have been asking, Rog, I would like a bundle for the hourly price movement ranges or the ability to buy the DPMR as a standalone. We just had that class. I guess it's been about 3 months ago. And yes, we are in the process of that. I know that the Trish boss is working on that. And then I think it's just a matter of getting all that set up with the office. I will find out, but I'm hoping it will be this month. And at that point, everyone can either purchase the bundle of the hourly price movement range and the daily price movement range, or whichever one it is that you want. So yeah, stay tuned, Praveen. I will have good news soon. I know it'll be settled early this summer. So I'm hoping this month or next. All right. Yeah, I get a lot of questions about that too. So thank you, Praveen. All right, next up is, let's see here. Good morning. Good morning. Great to see everyone. Awesome. Awesome. All right. LMT. Can we see LMT on the daily? Absolutely. It shows positive earnings, but a negative price action. And it's still sitting on key moving averages. Is there a volatility entry? So yeah, let's talk about Lockheed and just and I don't want to say it's a error without giving this some context. But, look, one of the things that I'm adamant about is traders not making binary bets on earnings. It's a low probability, high risk, kind of throw the dice down the felt table kind of trade. And I won't do that, right? I like playing probabilities, but that does not make me a gambler. And I know none of you are here either. Okay. So if we're looking at Lockheed Martin, that it's going to be bullish, see, this is where it gets very tricky. And it's not. There was nothing about Lockheed Martin that was inherently bullish going into earnings, which I know we can see now, but I'm going to show you why you could have known this before. Okay, first of all, Lockheed Martin, to have a bullish take on Lockheed Martin is very misguided for two reasons. One, it's in chop, right? So when we're talking about chop, overbought, oversold. So your setup, Matt, is going to be an oversold buy, which I'm not quite certain I see yet. I'd like to see an inside candle or a minor low. So that's the tactical approach that we do in the Sector Secrets Mastery. So first of all, there was nothing bullish about Lockheed Martin going into earnings. The other part of it is, remember that a lot of our expectations are priced in before earnings, which is why I say, and most traders don't know how to use this. This is something that I teach my members in the mastery to use, and that is understanding what whisper numbers really are. And I don't mean 2 days before, 3 days before earnings. I mean 2 weeks, 4 weeks before earnings, right? And that means that I'm seeing the incremental adjustments in the whisper numbers by charting them, right? By seeing that. And now I can see whether or not buys were built in, bullishness, optimism before earnings, because then what happens? Now we end up set up for buy the rumor, sell the news if the earnings are more or less in line. And heaven forbid they miss, the exaggerated move is then much more possible, right? So first of all, this is not a trending environment. So to call something strong into earnings, we want to avoid that. In fact, it was definitely overbought going into earnings. And now let's just use that other side of the coin to our advantage. Let's wait for it to get oversold or give us a minor low or inside candle. And a lot of traders make this mistake. It's typically a very, new trader mistake. And that means we can learn and figure out, oh, that's the pattern. Great. That's what a trend is. Awesome. There's no 200 propulsion here. Very choppy, overbought, oversold, right? Not necessarily continuation. So is there a volatility entry? I'm going to look, Matt, for if I can get an oversold stochastic, that would be fantastic. If I can get a minor low or an inside candle to show that after this big candle of unusual size, yes, total Princess Bride reference to rodents of unusual size. That is a rodent of unusual size, right? Let's wait for that pause candle, and then we'll look to capitalize on that. And the soonest we could be able to do that would be, if this is Wednesday, that would be tomorrow, Thursday. All right. So I need to see the Wednesday candle. We can capitalize on Thursday. So yeah, Matt, if you want to bring it up tomorrow in Charts and Coffee, let's see, look, let's see how this progresses, right? So thank you for the question. And I hope that walk through earnings was helpful, because there's a lot of gambly type ideas out there around earnings, which will get traders into a lot of trouble, right? Okay, next up, Sergio. Sergio. Okay. Do I have any fundamental class to know how to choose a stock for investment long term? So, Sergio, classes are great. I love classes. It's an opportunity to sort of on a Saturday shut out the distraction of ongoing market movement and sit down and say, okay, we're going to focus on this topic for 4 hours and go through a lot of mechanics. When it comes to investing, I am very much a believer, and it's even trading too. I'm very much a believer of sort of live in the market, sort of on the job training, if you will. So with that in mind, I do not have that. But what we do is really an ongoing conversation with alerts in the Sector Secrets Mastery. So every Tuesday at 3 p.m., so 3 to 4 every single Tuesday, so 4 times a month, we get together and we look at weekly timeframes, and we look at the macro, and we look at the larger trends and the indices and the sectors, and we start to build a portfolio, which we have been now. We've been doing this since late Q2 of last year. So it's a relatively recent addition to the Sector Secrets Mastery, where we have this day trading approach we do in the morning, swing trading approach we follow up with, and then we added, just it made logical sense. Let's make this mastery a total look at the different time frames and time horizons that we can capitalize on, right? So every Tuesday we do that. And so the process is basically looking at relative performance, looking at a few key levels on a chart, usually the weekly, and I like to do that once a week. So rather than having a class, which could date itself very quickly, right? Because macro is an ever evolving set of data points. We just get together every Tuesday for just 52 sessions a year, so we can keep that conversation going, and then alerts can come out of that conversation. So you end up with not just a class, but a trade idea as well. All right, thanks for the question, Sergio. Next up is McDonald's. What do I think about McDonald's on the daily? Hey there, Mehdi. If we look at McDonald's on the daily, let's go back to the same conversation with LMT. Is this a trending environment? No. There's a few things McDonald's has over LMT, though. A clear price action above the 200 propulsion. We have prices sitting near highs. McDonald's is in a corner of the market that is going to benefit from some strength, and with earnings just around the corner. So this is what I would say. If earnings are on July 27, right, which I know that your question isn't necessarily an earnings question solely, right? It's, hey, is there anything we like in McDonald's on the daily? And, what are the ramifications of earnings? So the most important thing is always look at earnings from the perspective of going back about a month and then going back about 6 weeks. So what I'm putting on the chart here is something that I teach you all and so let me drop this last line. There we go. So what I teach, this is something that Trish has written up for Countdown Trader. So if you head on over to Countdown Trader, here, let me do this real quick. Go to Google and type in Countdown Trader, right? And then type in 642 earnings. That's the process. That's the nickname I've given my earnings approach, 642 earnings. All right, what you'll get there is right there, Countdown Trader, 642 earnings window. So just Google Countdown Trader, 642 earnings, and you'll get that link. And this will walk you through what it is I do. You know what? Let me send this out in the chat. There we go. Okay, cool. And I think the bot beat me to it. There we go. And it talks very specifically about the window that I look for earnings within. And gang, the first, and I do believe it's an error. The first error that I see traders chronically make is they start looking at earnings 2-3 days the week of. Terrible habit. There's so many opportunities that present themselves in the weeks, sometimes month before earnings, that to look at it right in front of earnings does two things. One, you've got to be an option writer. You've got to sell premium because the implied volatility favors that strategy. If you're a long call, long put buyer, as I am, I have a very uncomplicated, straightforward, directional approach to options trading. It is not going to favor me. I am not going to be in my power band with the implied volatility going up as high as it does. In fact, that's what causes a lot of the vol crush. So remember, you're in a vol crush window right now, my friend, right? You're in a bit of a vol crush window with McDonald's. All right. So all of that being said, am I more bullish than bearish? I am. What I would say, because we're so close, right? We're so close to earnings, and close for me is about 2 weeks. Switch it on over to a 60-minute time frame, right? And take a look. And I'm going to be really here. Take a look. If we look at the probabilities, and this is just for July, right? This is just the last 2 weeks. Inside the 2 weeks to earnings, and even inside a month, take a look. If you were to have bought in a green environment every single test of the 200, That one, you took on a little heat, but an option might have been able to withstand that move, right? That wasn't a huge move. That was a 2-point move below the 200. I think an option trader with a certain amount of elasticity around risk and proper position sizing. But let's say he got stopped out of that, right? 1, 2, 3, 4. You've had 4 opportunities just in this window to play wrong side McDonald's off something as simple as the 200 propulsion, right? And then if you've got some Darvis levels, take a look at my Darvis 2.0. This is the absolute best way to automate time-tested support and resistance. Look at how often the Darvis was in play. So, and I'm just showing you some basic setups, right, that you could consider. My favorite would be probably the one on the 26th, 27th, and the one around the 7th. Those would be my favorite. Those are things that fall in line with the sequence of readings that I want to see on my chart. And actually the one that's happening now would be pretty good too. So I would say shorten the time frame to a 60. That's going to make your trading more nimble, right? Because time frame does dictate time horizon. And then you can take advantage of McDonald's in this tiny window in front of earnings, right? And it is a tiny window. Other than that, if you're out at least 2 weeks, 4 weeks, 6 weeks, then you can play the daily in some bigger moves, which you can see probably would have panned out pretty darn well if you start that look at earnings earlier, right? So thanks for the question on earnings, gang. It's such a misunderstood topic. Again, because a lot of the sites and services and even traders out there only talk about earnings in the days preceding the event, it takes the directional debit, long call, long put idea, and it relegates it nearly useless. And it puts everyone in this binary, let's take a gamble type approach, which is sadly not the best way to do it. So I love the questions on earnings. Think about the window in front of earnings, and you're going to put yourself at a distinct advantage to folks who are wondering about earnings the day of or the day before, right? So fantastic questions, as always. All right. So that's the way I would look at McDonald's. We cannot take a stock out of the context of its trend. And that's why traders bullish Lockheed Martin just didn't realize, I would imagine if they were bullish, right, that they were looking at an overbought Lockheed Martin in front of earnings. And then McDonald's, be careful with that one too, right? Because it's not in a trend. Let's see if earnings can't drive it down a little bit, or let's stay nimble on the 60-minute and just trade it into that, as you can see here, Thursday before the bell, July 27th release. All right, gang, thank you so much for being a part of Charts and Coffee. I'll see y'all tomorrow, same time, same station. Caffeinate and dominate. My Sector Secrets Mastery folks. I will see you all in just a moment. All right, gang, take care.